Looking ahead, we see that occupiers will seek to avoid capital expenditure, so greater deal creativity will be required. We also envisage that the key regional cities will continue to attract footloose demand, as we've already seen, with the best buildings commanding much higher rents than previously.
We anticipate increased liquidity, in particular for larger lot size trades, which will normalise transaction volumes. We expect a greater number of investors to return to the market as confidence levels return.
We'll also see occupiers bringing in stronger return to work mandates, whether that be 3 days, 4 days. I think we'll continue to see increased flexibility required within our lease negotiations, so whether that's rights of first offer over additional floors in the building or break options built into those lease negotiations. I think we'll continue to see that and probably also start to see it on smaller requirements as well.
Construction costs have increased over the last few years, and what we are starting to see is that occupiers are at the smaller end of the market, increasingly focused on securing pre-fitted space from landlords. But this is also beginning to emerge in some larger transactions. Landlords are looking at ways of converting, say, rent-free periods into capital contributions in order to assist an occupier with the overall cost of fitting out new space.
We'll see traditional landlords that already have a flexible workspace portfolio increase that in line with demand, along with other landlords that hadn't previously looked to deliver space on a fitted or managed basis. That will also be on the rise, which we've seen throughout 2024 as well.
The office landscape will continue to evolve and respond to changing in work patterns, technology and people's expectations. It will be interesting to see how the blending of the physical and digital spaces will impact design. I also think that occupiers need to fully understand the operational commitment of some of the sustainability legislation that's coming out. In particular, when they're signing up to neighbours in buildings, they need to really understand what the impact will be on them as they operate the building over the course of their lease.
In Edinburgh, I see the chronic undersupply of office space continuing. I also anticipate that we may see a pre-let in the market which would push rents on again significantly to an economically possible development level. And this, I hope, along with improving investment yields, will see investor and developer confidence returning and more new starts in the city, which we desperately need.
I think in 2025 we'll see more stability in the market. I think those landlords, developers and occupiers which had put off making decisions will hopefully make them. We'll see occupiers realising there's very little space. Occupiers will realise they'll have to pre-let to be able to secure what they want, which will in turn drive development, which is ultimately what we want and occupiers need.
I can see 3 key themes developing over the year. Rents are going to continue to rise towards £50 per square foot. Given viability issues, we're working viabilities now and they only work at £50 per square foot. Secondly, the dwindling of supply is absolutely obvious now. The third theme that we're actually seeing though is for CapEx avoiding occupiers seeking grey space as a specific requirement. By that I mean space that's been previously occupied before by another occupier who might be actually coming down in terms of size and releasing floors. And the discerning occupier will look at that space and look at how they can reuse it, avoid CapEx and continue their occupation.
In Manchester, we're seeing a high demand for Grade A space, new build and Grade A refurbished space, and this has accounted for 65% of all take-up. We've now achieved £45 per square foot on a new build scheme in Manchester, and we expect that this growth will continue. We've also seen a return to the market of larger occupiers and requirements. In 2024, 23% of the entire take-up for the market has been for fitted space, so we expect that this will continue in 2025.
What we're seeing is a real lack of delivery of speculative space. That we believe will change because there is a real pent-up demand from occupiers for the best quality space, which simply doesn't exist at the moment. That will drive rents on to new levels, which will make development of spec products much more economically viable.